Let's get to Tesla here. The stock soaring 4% today on the back of the GM charging network deal. The EV maker locking in 11 straight days of gains, tying its longest ever winning streak. Last week, the chartmaster said that Tesla was still heading higher. It is now up more than 21% since that call. So is Carter going to say to stay long? Carter, what do you say?
We'll start with some last week today, get you caught up with all the pertinent information in the EV space, and then we'll check out CNBC's Chartmaster and see what he thinks the stock might do. And will I be making any option plays this week? Well, I guess you're gonna have to wait and see. But for now, let's get right to it. Tesla in early innings of golden success story. Fisker, Lucid come calling to China, Ford's Farley on EV price parity, and more. Biggest EV stories of the week. Jim Farley says the company's EV price parity with that of its ICE counterparts will not take place until 2030. Tesla stock is on a roll despite no material change in EV fundamentals, as investors look ahead to the potential the company offers. Electric vehicle stocks had a mixed outing in the week ending June 9th, the upward momentum in Tesla accelerating. The Elon Musk-led company brought down charging infrastructure stocks following a deal it announced with General Motors. Tesla's GM-packed global expansion drive and more. Close on the heels of striking a partnership with Ford, Tesla announced a deal with crosstown rival GM. In a statement, GM said it is collaborating with Tesla to integrate the North American charging standard connector design into its EVs, beginning in 2025. The collaboration will expand access to charging for GM EV drivers at 12,000 Tesla superchargers. If they already have 134,000 chargers available to them, why, pray tell, would you need these 12,000 from Tesla? I'll tell you. Because those 134,000 chargers that are available to GM customers are There is more security in having access to those 12,000 Tesla superchargers than it is to have double what's available to them right now, because those chargers are worthless. Tesla techno king Elon Musk and GM CEO Mary Barra discussed the partnership during a Twitter Spaces session. Analysts including Dan Ives and Alexander Potter see Tesla earning about $3 billion by 2030 as a result of its recent charging collaborations. Ives upped his price target for Tesla shares from $210 to $300. Tesla golden EV success story is still in the early days, he said. I agree. In my bear case, I have Tesla at a fair value estimate of about $364 per share, a little higher than Dan's new price target. We've heard a lot of news about the EV charging partnerships that are on the horizon for both Ford and GM. And to be honest, everybody making electric vehicles should be entertaining what Tesla has to offer. Make your vehicles with our standard. We will make more charging and everybody will benefit. Maybe not as much as Tesla, but your customers will thank you for using the North American charging standard. The majority of EVs will be using the NACS connector. It only makes sense that Electrify America, EVgo, all these others use the NACS connector. Otherwise, what's the point if you're not serving the majority of cars in North America? Tesla has been exploring expansion into more international markets to strengthen its credentials as a truly global EV player. Musk connected with Mongolian Prime Minister virtually this week to discuss a potential EV investment in the country. A Reuters report said that the company is also in discussion with the local government of Valencia in Spain for a potential automotive investment. The EV pioneer has additionally rekindled talks with India in regards to setting up a vehicle assembly plant in the country. This train has left the station, folks. There is no denying that Tesla will have its fingerprints all over the world in years to come. Now that we've talked about the best, let's go ahead and see what the rest look like. Fisker and Lucid took toward China. China appears to be an attractive destination for EV startups, Fisker and Lucid. Lucid hired Zhu Jiang, an automotive industry veteran, to head its China operations, a local media outlet reported. Following its public listing, the company set a 2023 timeframe to enter China and a middle-of-the-decade timeframe to build a plant in the country. Fisker, which began deliveries of its first vehicles in Europe recently, announced that it plans to open a delivery center in China in 2023 and start delivering the Fisker Ocean SUV in the first quarter of 2024. Best of luck to Fisker and Lucid as they enter the piranha tank, which is the Chinese EV auto market. They're gonna need it. Ford sees no EV price parity until 2030. Now, this is truly important. If Ford can't see price parity within its own models, they're going to have a problem. At an investor conference, Jim Farley said EVs will likely cost more than their counterparts that run on an internal combustion engine until the second and third generation EVs go into production later this decade. Good thing Tesla's on its fourth generation vehicle. The executive said he does not expect the cost of making EVs to drop to the level of making ICE vehicles until 2030, when the process becomes simpler and less labor intensive. And if you take a step back to think about it, those are probably very optimistic goals by 2030. Unless Ford makes some major breakthrough, they're going to experience declining internal combustion engine sales, which will then raise the price of those cars to produce because they won't be selling nearly as much volume. In the meantime, they're not producing nearly enough of their electric vehicles to experience economies of scale. If Farley and Ford plan to build 2 million EVs by the year 2026, maybe they'll have garnered enough experience to have a revelation on how to produce these things cheaper. Tesla has industry-leading margins, whether you're talking EV or internal combustion engine, so they're obviously doing something right. For Ford to do this, they're going to have to rethink a century's worth of automotive manufacturing. Nikola pushes back shareholder meeting. That's not a red flag. Shares of the beleaguered EV truck maker Nikola received a lift on Friday after the company said it would postpone its annual shareholder meeting from June 7th to July 6th to allow shareholders additional time to vote for a proposal to increase its authorized shares. The move may have been precipitated by a lack of the required votes for the proposal. The company, which plans to make its hydrogen fuel cell energy trucks, is short of cash to keep operations going. Not a good sign, I'll just leave it at that. NIO's mixed Q1. Chinese EV startup NIO reported a first quarter loss that was more narrow than the consensus loss estimate, while its revenue trailed expectations. The company's guidance suggests second quarter deliveries and revenue will likely decline from a year ago. Just more evidence of how cutthroat the Chinese EV market has become. As more players start to flood that market, the cream will rise to the top. And there is nothing more rich than the Tesla EVs that are produced in Shanghai. Very low cost to build and extremely high margins. The consumers will decide who are the winners in the EV space. And I don't want to call it too early, but it appears the people have spoken.
Tesla here, the stock soaring 4% today on the back of the GM charging network deal. The EV maker locking in 11 straight days of gains, tying its longest ever winning streak. Last week, the chartmaster said that Tesla was still heading higher. It is now up more than 21% since that call. So is Carter going to say to stay long? Carter, what do you say?
I mean, gosh, who knows? But my hunch is to take some measures. It's not just because it's up 11 sessions in a row. It's up a lot. There's been price discovery, if you will. It's also news related with this sort of joint venture thing going on, or at least collaboration with Ford and GM. But also today, with the gap gapped up at the open, that means there's an unusual buying pressure. Used to be called a late open, of course. We don't have those anymore. But the stock faded and didn't close all that well. So I think it's up maybe a bit ahead of itself. My hunch is to write some calls, to trim, to take some measures. We have two charts. Let's look at them, if you'd like. The first is, perchance, we've retraced, remarkably, exactly half of the peak to trough sell-off. We know that it was $415 at the high, $100 at the low, and here we are at $244, halfway back. The second chart of two, I just try to depict the downtrend line in effect since the high. Does it have to stop on that line? Of course not, but I think you trim.
Woo, those charts are scary. It is tough. It is so tough to try to predict what the market is going to do, but your boy's gonna do it anyway. What I plan to do, because there's a lot that goes into my decision making on purchasing options, and none of it is relevant. Like, it is just how I feel. Implied volatility is the most crucial thing I look at before engaging with an options contract. It's the premium that you will pay. So if the implied volatility is low, then I'm getting a fairly good price. But what is low implied volatility when you're talking about Tesla stock? I need the implied volatility to be less than 60%. I'm still paying a premium. For long calls that expire a year or greater, sometimes I will go a little bit higher than the 60% threshold. It really just depends. But based on those charts, I kind of want to put in a put but I'm probably going to test my luck and put in a call around 8:50, 9:10 in the morning and kind of see where the market direction is going. I don't plan to have an expiration date on the 16th of June. It will probably be the following week on the 23rd.
Steve, you took extreme measures when it came to your Tesla position.
I did. So originally, when he had that chart up around $100, I bought my first leg at 105, sold it in the 190s, bought it back above 200, bought it again as it dipped below, and then he alluded to it, or he said it. 11 straight up days. I think the future is extremely bright for Tesla going forward. I think that they have a monopoly in multiple areas within the EV networks. And I just want to see, I want to see it like the overall market. I want to see it come back in a little bit, give me a better entry point. Took my chips off the table. We'll see.
The optimism surrounding the charging network deals with Ford and GM is it's tremendous. I mean, Piper had an interesting note saying that Tesla could earn as much as $3 billion over the next 7 years from these agreements. Bono in. I mean, if you liked Apple services revenues, maybe this is sort of the beginning of something like that.
As you hit the nail on the head, definitely speaks to recurring revenue, which you definitely like. I think really, the question is about momentum and short-term trading activity. And to the other two previous panelists' point, I just think it's a bit overstretched here. With that said, Tesla just seems to have a mind of its own. This stock could go up another 20%, 30% from this, and I don't think any of us would be surprised. So I think I'm with Carter in that, not that I would be just shorting it here, but if I've already been in, Steve said he's in, he has about $105 cost basis. If I am in there, I'm definitely writing calls if I don't want to sell outright, but I'd probably be taking some cash and looking to deploy it elsewhere.
You sold that 105 tranche at 190.
Yes, yes. And just to be clear, I'm out of the name right now. I want to take a look and see how it reacts next week.
Yeah, Guy, next move, higher or lower for Tesla?
You look at Carter's charts. I mean, 50% retracement 1, right up against the downtrend line 2, and we've been in this downtrend for a few years now. It's a pretty significant one. The bounce has been historic. But I mean, the trade that Steve just put on is fantastic. I mean, wait for a better entry point. I don't think this is the entry point to get long.
GM was a winner in all of this too, Courtney, by the way, and Ford when it announced its agreement with Tesla.
GM and Ford, yeah, which I think that's the kind of the bigger picture story with this is the batteries really are not as big of a high margin business for Tesla, but it's really going to help people get more into the EV space because you're still not seeing a majority of car ownerships go into EVs. But if it's a lot easier where people can drive for longer, it's easier to get charging stations. It's really going to benefit everyone involved. So it's kind of a beneficiary for everyone.
Everything Tesla does is to accelerate the transition to a sustainable energy economy for the planet. This is just one feather in the cap to ease humanity into the direction of electric vehicles. Tesla is going to continue to lay out their supercharging network regardless. They cannot provide every human being on the planet with an EV. They may be able to do a robo-taxi, but that's a topic for another day. But with their aspirations of selling 20 million vehicles by 2030, if other automakers aren't thinking about production in exponential terms, we need more and more production to meet the ever-growing demand. Tesla is going to have the majority of the market because everybody else in the market doesn't believe the transition is happening faster than anyone could have realized, leaving Tesla the most prepared, leaving Tesla the best in class. Listening to the experts, nobody knows what this stock's gonna do. They wouldn't be surprised if it made a 20% up move. They wouldn't be surprised for a regression. The implied volatility for an option that expires at the end of the week is somewhere around 65%. That means everything's baked in. You have to be 100% correct when taking out an options contract. If you purchase a put and that stock rises 10%, you might as well get out of that position because at 65%, you're done. There's no way you're going to come back even. And vice versa. You put in a call and we drop back down to 225, you get out of that position immediately because there's no way at 65% implied volatility, the premium that you're paying, if you're wrong initially, that's a wrap. When dealing with Tesla, most of this is true anyway because 50% implied volatility is quite high, especially for a company with this type of market cap. Options are very dangerous, and if you are not right, you will be burned. There is no shortage of debate regarding Tesla stock. If you want to track all my options activity or my shares in Tesla, please join Patreon with the link in the description. Also get access to my full self-driving beta videos and much more. I'll see you over there. Until next time, be easy. Peace.